Okay. So as we're good.
We have a question in the chat.
Okay,
So Holly asked, what are the advantages to having good credit?
okay. So advantages, yeah,
Great
so
question.
we have 3 questions so far that folks are coming into the space with as we're thinking about financial credit. Any last questions for folks who are here via Zoom? This is what I like to call the window of opportunity coming to a close. Okay, and that's okay. I think we'll have a lot of opportunities. Thank you for writing on the board. So we just want to keep these in mind so that we make sure that as we're talking about this stuff, we're making sure we're hitting on these points. And we just want to stay, me and Stephanie, as we're coming in, that like we're not experts on this stuff, but we just want to share some of the pieces that we've been able to like house in the AACS resources. At the end of the presentation, we'll talk about some resources that we want folks to consider also as they're thinking about financial credit. So the next question that I have before we actually get started in the slides is, I also want to get a sense of how folks have engaged with financial literacy information in the past. Like, what does that look like for you? And I just want to share personal experience. Like for me, I was telling Stephanie that I didn't have a credit card until I had graduated. Hello. Oh, no? Okay. I was sharing that I actually didn't have a credit card until I graduated from college. And that's because I was like really nervous. I feel like I didn't have enough information. And that as I reflect about that, I think about like, what were the barriers of like why I didn't have this information? What did that mean for the people who were a part of my community, like my family, my advisors, right? Like, did I ever ask about that? What workshops was I attending when I was an AAC student? I should have gone to that financial credit workshop, right? So like, I'm thinking about that for myself. I just want to know like, what are folks' experience with financial literacy information?
I think like for me, a lot of it is like word of mouth information.
Okay, so sharing knowledge with
yeah.
like community, friends.
Yeah, I would also say like my mom, well, she like cleans houses and a lot of like her clients, like there's one specifically that works at a bank. So
Mhm.
she helped us a lot with like setting up accounts and all that type of stuff.
Yeah,
But even then, like when we were doing all that, like we didn't really understand what it was for. And it wasn't until later that I was like, maybe I should know what all of these accounts are doing.
Mhm.
What
what
all
it
these
means,
cards
yeah.
are for.
So just kind of leaning in on your resources, community, word of mouth. Any other experiences from our folks via Zoom on how have you engaged with financial literacy information? What has been your experience?
For me personally, my brother Gary, he's all about finance and all that. So he kind of like, I didn't have a credit card either till like probably like my sophomore year of college actually. And I guess it's like, it's scary because it's like, it's something that takes forever to build up, but can be depleted in like, if you miss a payment or whatever like that. So it's like, it's very scary, but cause you have to be on track of it. But I guess when I was applying for it, I was like, oh, I don't want to, I'll just stick to my debit card, and just scared of kind of building up credit because it's like I don't make a lot of purchases, but just to be like, I'm very forgetful and be like, oh, I just forgot a payment and I'm screwed now. But other than that, it's kind of just my brothers helped me out a lot with it. So, but you just got to be on top of it for the most part.
Yeah, so just being really aware of what it actually means to have a credit card, and it's really intimidating and it's pretty serious. So thank you for sharing.
We have 2 chat responses, or 3. Cool. So Brianna mentioned, for me, I would ask questions to my advisors in the past to understand how to apply and what to do and not. Now I'm helping my little sister get a credit card. Awesome. Yay, pass that knowledge down. Isabella said, it's been really daunting to think about, but I really want to get one sometime this year.
Mhm.
Cool. Holly mentioned, my mom made sure I got a credit card early and taught me what to do and what not to do. Awesome. Sounds like me.
Yeah, awesome. What about, yeah, do you want to share a little bit?
Yeah, so in my experience, my mom, immigrant mother, came to the US, and so she learned early on that credit is super important. US. And so she always taught me from a very early age. She's like, Mika, like you may not have any money, but as long as if you have good credit, you're good. Like you're good in this country if you have good credit. So once I turned 18, she took me straight to a bank and I applied for a credit card. It was like with Bank of America and I got approved for $700. I remember, I thought that was so much. And she told me, she's like, she helped me monitor that credit card. And kind of didn't allow me to buy things that I knew. She's like, if you don't have money in the bank to make a payment right now, don't use it. Always make your payments on time, full payments. Don't ever like make minimum payments, pay it in full. And so that was always the messages that I got, especially because I now know part of what makes your credit history like either go up or down is how long you've had your credit open for. So for me, she taught me like as soon as you're 18, as soon as you're eligible to like start credit, I got a credit card when I was 18.
Yeah. Thank you for sharing, Stephanie. And thank you for folks on the Zoom and for folks here for sharing. So we'll go ahead and get started. And again, please, for folks, we don't want folks to feel like this is like a lecture style. Please jump in. We want folks to share a little bit about their experience. If anyone has any knowledge around the things that we're talking about that we're not mentioning, please jump in. This is a space where like folks have shared, we want to share the knowledge. We want to make sure folks feel comfortable about that. People are at different stages in the process of financial credit. So please feel free to engage in any conversation here. So I want to start us off with the true or false, kind of test a little bit on like where folks are at also. And Stephanie is going to be sharing that for Zoom. So the first question is, or the first statement is, my credit score is impacted every time I check my credit score / report. What do folks think? Please feel free to jump in for folks in Zoom. What do you all think? False. Okay, so.
I don't know. I think it's true, but it depends if it's you or like a company.
I'm actually gonna put this here. It's just so your back is not towards that. Any thoughts on the Zoom?
Someone-
Julissa, what did you say?
I said I think it depends if it's like you who's checking or if it's like a company or something.
Oh, I see.
Okay. Someone on Zoom said true, one person. Any other opinions? Who wants to weigh in? True or false?
I'm gonna say false, just because like I've never heard of that. I mean, I'm kind of worried what the answer will be because I kind of checked it a lot when I first got my first credit score and all that, but I'm not too sure. I want to say false.
Okay, cool. Drum roll. It's false. Actually, yes, I was waiting for Stephanie's to load. So it's actually false. So you actually do have the right to check your credit score and report every year for free with no impact. This is known as a soft inquiry.
Finish, and then I'll add something.
Okay, yes. Something that you mentioned, Julissa, is that there are companies, yes, that can pull your report. And you usually are getting a notification letting you know, hey, this company wants to pull your report. And you usually have to prove it, right? So you know when that's happening, and that's more of a hard inquiry. So just know that they're pulling those pieces from the credit bureaus, which we'll talk about in a little bit.
To add, so yes, like the statement says, every time I check my credit report, my credit score, right? So soft inquiry, no, it doesn't affect it, but hard inquiries do, right? So every time that you apply for a new credit card, you apply for a car loan, you apply for any type of loan, that does impact your score.
Because they are checking your credit,
Yeah.
right? So
Yeah.
yes, that doesn't happen.
So if you're applying to, you're like, oh, I want to get a credit card, I'm going to apply to like 10 different places. Don't do that. Stick with minimal amount of credit cards that you want to have and be mindful because every time they're going to run that report, you're going to lose points from it. So but that's a hard inquiry. Whereas there's ways that you can check your own credit score that doesn't affect it.
So this was like a false and
It depends. Someone in the chat said it depends.
yes.
You're right. Yes,
Cool. Awesome.
cool.
Okay, next question slash, next statement, sorry. Getting multiple credit cards is bad for my credit score and report.
True.
True. Folks online. So we have two folks
True.
online. Okay.
Someone said false. Okay. Make it spicy.
All right. Drum roll and go. It's actually incorrect. Sorry, we were trying to do it like
I love
David. So you can apply for various credit cards if you choose, like, I mean, yes, be smart about it, obviously. You're encouraged to have different lines, right? As long as you're being responsible about this and really understanding, like your payments for those, just kind of like how Stephanie was sharing earlier, like being really aware of those payments, being aware of like, what can you actually manage, right? Let's see. Yeah, I think that's just the thing to know for now. We'll talk a little bit more about those things.
I'll add some things to that too. So when you're getting your credit, like when you're building your credit, right? Thinking about what type of credit card you get, that will also impact it. Like it'll determine how much it impacts it. So store credit cards, like let's say Nordstrom, Macy's, Target,
Macy's, I'm just
I
kidding.
don't know.
What's
like
a Macy's? I'm just
people
kidding.
don't know what a Macy's
I'm just
is.
kidding.
I didn't say Robinson's May. Y'all are too young for that. You may know. You don't know. Lord, I aged myself. So like those types of credit cards are not going to drastically improve your credit. A credit card through a bank or like a much bigger credit card, like a Visa, like standalone Visa, Citibank, those types of credit cards can positively impact your credit a lot more than just a store credit card or like Amazon credit card or like Target, those types of cards. So being mindful again and responsible, what type of credit card are you opening and how many of them are you opening? Like, yes, be mindful, be responsible in those pieces.
Next statement, a late payment on my credit card will forever remain on my credit report. What do folks think? I feel like all of these have like a true or false and like
Yeah.
more
It
information.
depends.
What do folks think? Any stuff on Zoom? Any comments?
Zoom, anyone? No one yet.
I just want like a late payment at all would be, like I said before, is very not good at all. But I'm not too sure about the remain on your credit report. It probably does, so I'm gonna go with true.
Okay.
Someone said false. Forever is a long time. Yes, it forever is a long time.
All right, ready? We're gonna show the results.
Drum roll.
Wrong again. Okay, not like that, but so it's false. Yes, a late payment can lower credit score and potentially show on your credit report, but it will eventually be removed from your credit report. Late payments usually get cleared from your credit report after a year, depending on the type of late payment and if you have multiple late payments. Stephanie, the expert, do you want to add anything?
So I would share with this piece, depending on what it is that you're putting a late payment on, and again, the frequency, right? Like, is it a one-time thing, like you completely spaced out, but every other payment you're on time? In those occasions, there are certain companies or lenders, banks, whatever, that will forgive and excuse that one late payment. So for example, I happened to miss my car payment once by like 2 or 3 days. And I called in panic. I was like, oh my gosh, I'm so sorry. Like trying to like make reparations there. And they're like, oh, we see that you've made every other payment on time, like even early. We'll excuse it. We'll give you a chance this one time, but then every other time you'll get charged, and it'll start affecting your credit. That varies from place to place, from company to company, from bank to bank, whatever it is that you're making that payment to. So call and ask. How it could affect your credit, sometimes they give you like a freebie in a sense, but that is gonna vary.
Well, I was gonna say, we could talk about it later, but I was wondering if we could talk a little bit about like how bankruptcy affects like your credit and stuff like that, or like the affects bankruptcy.
That's a good point, and I don't think we have a lot of information. I don't even think we have bankruptcy information in here. I would say that that is a really good topic to look into also. We'll talk about some resources at the end. But yes, we can engage in conversations if we like, as folks kind of share a little bit about their experiences and we go through slides if it comes up. I want to make sure that we talk about that. And we might not have all the information, but yes, that's really good that you bring that up. Okay, last one. I know we're 36 minutes in already, so I want to be mindful of time.
36, go 21.
Oh, my bad. I think I started mine earlier.
Oh,
So the last statement is my student loans are a form of credit and impact my credit report. I know folks were talking about student loans. What do folks think?
someone said true on the chat. True. Two truths.
True,
True.
true, true, true. Okay.
Someone said false. Someone said true, question mark. Def true.
Good to know. Okay, ready, Stephanie? Sure. It's true. So a student loan is a form of like having credit, right? So
It's
borrowing money, you're paying that back. That's a way, kind of like how the credit cards work, right? So be mindful of those payments. So as folks are getting ready to graduate too, you know that students have 6 months before payments start. Those are things that you want to start thinking about as you're getting close to graduation, because you want to be ready to do those. And there are options for folks if they want to do a repayment plan, depending on what field you're in, right? So be aware of those as well, especially also if you're going to graduate school, because you can put those loans on hold. I forgot the term is. You can
Deferment.
deferment. Yes, I was like, I think it's deferment. So those are a whole other thing. That's a different workshop, but just be aware of those things. And this does impact your credit score. Awesome. So we can just go ahead and jump right in. So just want to start off with like a few pieces and understanding financial credit and just really breaking it down, like what is credit? It's an arrangement that allows consumers to purchase goods and or receive services when you need / want them with the promise that you're going to pay it later, right? So Stephanie talked a little bit about that's like a variety of things. That can be a store, car loan, student loans. It's a lot of those things. That's credit, right? So there is revolving credit and installment credit. With revolving credit, you are given a maximum credit limit and you can make financial purchases up to that limit. Each month, you are each month, you have to pay, what does my note say? Yeah, so sorry, most credit cards are a form of revolving credit. Installment credit, a creditor loans you a one-time specific amount of money. So think of this as like a student loan, a car loan. So one of them is more like a credit card. One of them is more just like you get a big amount that you're using that you're paying back, right? In different installments. Does that make sense? Do folks have any questions about that? Do folks have any examples of like, which one is this one? I have this. What about this? Any questions about revolving credit? Okay. The next piece is, I know that someone had mentioned like, why do we want / need credit cards? So some of the things that come up for folks, right, is like just general convenience of being able to purchase things when you need. Of course, that's going to come with a lot of responsibility that we'll talk a little bit about. The one thing that's on here that I just want to clarify is the employer / opportunities. You're not going to have employers looking up your credit score when you're applying for jobs. The only place that I can speak for that I know I've seen this is if you're working in financial business, like in the financial sector. So if you're if you're working and want to be a financial advisor, of course, we're going to check those pieces. How do you manage money? Because you're in charge of managing other people's money. So that's an example there. I don't want folks to think that you're gonna get your credit score checked every time you apply for a job. It's good to have it for unexpected costs. Things always come up. It's also convenience, emergencies, to build your credit score, of course, and just to have a financial record.
I will also add, if you are looking at like renting or owning a home, they will check your credit score. So that's also something to be mindful of. Like you want to make sure that it's good. Because let's say when you're renting a new home, or a place, an apartment, whatever, right? The landlord wants to see your credit score to make sure that you are a reliable person that's going to make their payment on time.
Yeah.
So that's also like a huge way that we all need financial, like we all need to be mindful of our financial credit, and want it to be. So just being mindful of that like not everyone is going to need to go out shopping and spending all these things. Not everyone is going to take out a car loan. Not everyone is going to take out student loans. But at some point, like you might have to figure out where to live, right? And like that is one way that your credit score will be ran.
Yeah, that's the, thank you for sharing that. That's definitely the opportunity portion of it. Does anybody live on off campus who has had to sign up for like utilities where they asked for their credit report? Or credit score, sorry. Yeah, right. So those are additional things that like people need that Stephanie's talking about. So those are the things people need that are the opportunities of guaranteeing those basic needs, unfortunately, honestly. All right.
Hold on.
Any questions about those pieces for folks?
Someone mentioned, I also noticed from experience that income is very important. If you had good credit score, but not a good amount of income, it's hard to get a home, car, even though you have good credit score. So yes, I will also add to that, so let's say you're taking out a car, right? Either like buying or leasing, you're gonna have to get your credit ran through. They will also ask you like, what is your annual income? To figure out like, all right, like do you make enough money to make X amount of payments? Right? So very, very good point, Brianna. A credit score though can work to your advantage, even though you don't have a bunch of money with you in your income. Your credit score speaks to your timeliness and your ability to like prioritize making payments, right? So it says that you're a reliable person, it says that you're timely, and that's what a lot of like dealerships, whatever, people want to know. And they might also ask you concurrently, like, what's your income? How much money do you have in assets, right? Like, what's your total amount of, like, what's your value? So very good point, Brianna. Thanks for bringing it up.
All right, let's go ahead and jump into the next slide. So I just want to share a little bit about credit cards, with specifically, which is the revolving credit, right? So when using a credit card to charge purchases, usually there is a finance charge included. So when you are applying for credit cards, there are things that you want to be paying attention to. We won't speak about all the pieces regarding like how to look for a credit card that's going to be awesome. What are all the details? Those are things that like we want folks to be aware of though. So making sure that you're limiting your use to like the essentials really. So some of the things that impact yes, what are some of the things that impact the credit card pieces? It's just the amount of credit that's used, the annual percentage rate, which is the APR, and then the length of payment time, which I know that's what Stephanie was talking about, like how long have you had a credit card, right, or lines of credit. So keep your balances under 30%. That's something that, I mean, it's not like you need to, but it's something that's like pretty recommended for the limit, right? Your limit might be, like Stephanie had mentioned, 700, but like really keeping in mind using 30% is pretty good. Some credit cards will tell you like, okay, your score is going to improve if you use up to a certain limit. It's not going to be really high, but if you have a credit card and you haven't used it in like 6 months, what does that look like on your credit score? Because that can also impact those pieces. So for the annual percentage rate, which is the APR, the higher the interest rate, the more finance charges you pay. Is anyone pretty familiar with APR? Is anyone familiar with it for folks who are here via Zoom?
Nothing so far. Oh. So, do you have more to say on that?
Sorry, go for it.
Okay. So APR, the annual percentage rate, for some credit cards, they could be really high. Especially if it's your first credit card or your credits, your credit history, your credit score isn't very high, right? Like you've only had credit for a short amount of time, and short amount of time is like less than 3 years, sometimes less than 5 years. So you can have some APR, some credit cards that are like 27% APR. That's really high. But the thing with APR, and this is like on like the big tip on like how do you like best ways, like someone asked earlier that they want to talk about various ways of building credit. If you make your payments on time and full payments, so you don't pay the partial payment, your APR could be 50% and you never get charged that, as long as you're making full payments. If you make a minimum payment, let's say your balance for like easy numbers is $200, but you make the minimum payment of 25 and you still have a remaining balance of 175, then you're gonna get charged that APR on that number. If you pay the full $200, then that APR doesn't matter. At first, most like the ideal is to always have a really low APR, but you're probably not going to get a low APR until you really build your credit history, and that's going to take time. So just be mindful that when you have your monthly bills, that you're paying attention to like, well, what is the minimum payment? Is it possible for you to pay the full payment? Always do if you can.
Meeting.
Pardon? Oh, yeah, just be mindful that if you're not paying the full payment, remember what your APR is, because that is the rate that you'll be charged depending on what your balance is, right? So just be aware of it so that it doesn't come to a surprise for you. Because then you like the next month, you're like, well, I thought my balance was 175 and now it's like 230. Like what happened, right? Like just be aware that that's where APR comes from. And same with like car loans, whatever your APR is, ideally you want to get it as low as possible, but sometimes that's all really depending on what your credit score currently is, and it'll take time.
So is your APR, is it like an interest? You could think about it as like interest on your.
Yeah. And when you're applying for credit cards or student loans, car loans, right? Like any amount of money that you're borrowing, always ask what the APR is. There's some places where you can negotiate APR, like in a car, you can negotiate that. Credit cards, not so much. That's pretty set. But just be aware of like, okay, my APR is like 27% or 19%, right? So be mindful of when you're making your payments, that is what you're going to be charged.
Any questions? Thank you, Stephanie, for folks via Zoom or folks here. I just want to state, I read the last statement wrong, which is the length of repayment time. I was thinking of like the amount of time of having a credit card.
How long you have to repay?
It's with the repayment, which is what I wanted to clarify. So taking a look at like how long is it taking you to pay back a certain amount that you have as a balance. So the longer it takes you to pay off a balance, the more interest you're paying, which are the pieces that Stephanie was talking about. Thank you.
Cool.
Yeah, so this is just a visual breakdown. Sorry if this is a little small. A visual breakdown of credit scores. And so I just want to be mindful, like we don't have to talk about people's credit scores in here. We know that like folks are at very different stages of like building their credit, but this is giving you an idea of the breakdown of credit and what is impacting that, the percentage. So as you can see, 35% is the payment history, 30% is the amount owed, 15% is the length of credit history, 10% is new credit, and 10% is the types of credit that's being used. So typically, one of the most important ones, and I'm not gonna say that this is coming from me, I'm taking this presentation that has been created by staff before not us. One of the most important ones is the payment history. So really being mindful about that. And what we talked about in regards to like having payments on time, have those been removed? Has that been a consistent thing? Was that a one-time thing? And then moving on to the amounts owed. So really being mindful of the balances that you have, right, for all your credit. The length of credit history. So how long have you had your credit card / loan, and how long have you been making payments for all these things? The new credit is talking about what types of credits you have recently applied or have opened. So having that is something that can affect a credit score. And the types of credit is having a variety of credit types, like Stephanie had mentioned, right? Like what does that look like on a car loan versus a credit card for a store, mortgage, things like that. Student loans, car loans, all of those. Do folks have any questions about this visual breakdown of how scores are being impacted and what the scoreboard looks like in regards to like what excellent credit is versus the other end of the scale, which is very poor credit?
Someone mentioned in the chat, also a tip for everyone is to be aware of your reported date on your credit card helps build credit score. So thanks, Brianna.
Thank you. All right, so I know that some of the things that folks had mentioned that they wanted to talk about what are like some of the advantages of having good credit. So we'll talk about those now. We had mentioned these are some of the things that we had mentioned before, but we just want to make sure that we talk about them a little bit more in detail. The employment / opportunities are the exact pieces that I mentioned of, yes, for some financial employment, they will check those pieces. So if you're in the financial sector, yes, be mindful of those pieces. And for a lot of the basic needs of housing, utilities, all those things, landlords do check credit scores. So those are the opportunities that you need to be mindful about. Lower interest rates. So for when you're applying for a loan or credit card, it can be granted with little to no interest rate due to having a pretty solid score, right? So those things are really going to be coming into play when you're applying for stuff. Your score is going to be really important. So it's going to be really good to have a credit score then. Easier approval. So for renting or credit cards, you're more likely to be approved for faster approved for a credit card or loan with a solid credit score. Better rates. So you can have higher limits. So then, go ahead.
I will add to this better rates. So let's say you start off with a credit card and you start off with like $700, right, or something. And then a year passes by and you apply to another credit card, right? And then all of a sudden you get approved for like $5,000 because you've been building up steady, which is like cool, good sign that you got approved for that much. And you also have the right to say, I actually don't want $5,000 limit. I like, can you bring it down to like 3,000? And the credit card company or whoever can lower that too. If you are like, I don't want to be tempted to spend that much money and then have to pay it back, you can kind of set that boundary for yourself. And also you can always bring it back down. Obviously never up because they set the limit, but you can always say that you want a lower credit limit too, if that's more beneficial for you.
I didn't know that, actually.
I
Thanks for
learned that
sharing.
from George.
Oh, okay. George was
Yeah.
a staff member from Campus Credit Union. He did a loan management presentation for our students who are getting ready to graduate. So keep an eye out for Campus Credit Union presentations, not just through our office, but they do a lot of stuff on campus. Oh, thank you. And just general convenience, honestly. I mean, we talked about a lot of like the opportunities and things that it like opens up like opportunities for, and it is like a big piece that like if there are other things impacting credit scores, it really does limit. And it sucks to say, but like a lot of like basic needs, unfortunately. And so really keep an eye on it because it really does open up a lot of doors for things. Do folks want to share any other conveniences or benefits of having good credit score that we haven't mentioned on here?
I'll add one more thing. I feel like I'm talking a lot.
That's okay. You're comfortable.
So it kind of goes along with it, and also an FYI tip in case anyone wasn't aware of this. Different credit cards in particular have different purposes and different benefits. So there are some that give you points back, and like double points or single points for every dollar you spent, right? Depending on what your credit limit is to begin with. That's good to keep in mind, right? Like a tip that I was told when I was starting to build my credit and I continue to use is treat my credit card like my debit card while knowing exactly how much money I have in the bank to be able to pay it back, right? So I start to continuously use that credit card and then pay it off, right? Fully. Then I start to utilize the benefits of the card. So I could get travel points, or I can get discounts with certain companies, so on and so forth. The more that I use it and I'm paying it back, then the higher my credit limit could be if I want to at one point increase it, because some credit cards, depending how long you've had them open, will say, okay, like you've used this credit card for 2-3 years. This is an opportunity for you to increase your limit. Like you got approved for $3,000 more, $10,000 more. Do you want it? And you can say yes, or you can say no, right? And that you're using those benefits that that credit card will have. Again, certain cards have certain purposes. So just also be mindful when you're looking at potentially opening one. There are ways to kind of think of how can your card work for you and your lifestyle. If you want to like travel often, does it make more sense for you to get a travel card or to get a card that gives you points in travel, right? So being mindful of those pieces, that's a general convenience, right? Like I have a card that gives me a lot of points for travel. So I'm like, I don't have to pay for flights because I got that through the points. So other general convenience points that come along with that.
Yeah, and I think something to know about that is that that's why there are different banks, credit unions also, right? So it's good to do your research on like, how much am I getting back for what I'm spending at this bank versus this one, right? Typically, your big banks have lower return on like those
Real
things, to be
small.
honest. Sometimes like that's the only bank that I hear about, so I'm like, okay, I'm gonna go with them. But there are other banks and other like loan providers that have different perks, and you can honestly just look up like maybe a bank that gives you $5 back for every like something that you spend, right? Versus like the point one
0.00015.
that like maybe a big bank like Chase does.
Yeah.
So I know we're not talking about banks specifically today, but that's also something to keep in mind for something that's like a really big like benefit, like Stephanie mentioned, of like the perks of having those credit cards. So do your research and you can move banks, right? So
You can have multiple banks.
yeah. Okay. Chugging along. Okay, so some of the things that they're not like necessarily disadvantages. I don't think that's like the appropriate language for this slide, but it's more of like, okay, some things to really keep in mind, right? So some of the things that are listed on here is, first off, the reduction of future income. So what does this actually mean? And it's something that Stephanie and I think a lot of folks have been mentioning. So when we tend to spend earlier in the month, then we have this limit that is like really high. Sometimes we're like tempted to spend that, but do we actually have enough money? Are we making enough income to pay that off? So that's what I'm talking about. That's what we're talking about when we talk about the reduction of future income. A lot of that money through a credit card. The risk of major consequences if not maintained, right? So we talked about a lot of like the benefits, and a lot of those things were really like just basic needs stuff that like it could be really hard for someone if they can't get utilities set up in their home and get approved, right? So those pieces are really important to be aware of. Just general temptation, right? It's really easy to spend money on things that you don't need because you have something that's already available at all times in regards to money, but you do have to pay that back. Just expenses, right? Using credit cards usually come with an APR, right? It's just the things that Stephanie talked about. So really being mindful about those pieces. And if that's building and building, that can be really financially challenging. And also the risk of loss/fraud. So always keep an eye on your expenses. Always be looking at like what's being charged on your, not just your credit card, but also just like on your debit card, being mindful of those things and really like taking a look at those things. And it does happen. Always communicate with your bank. Any other things that folks want to share that aren't from here? I didn't realize there was an empty box. Maybe that was for if anyone wanted to share. All right. Okay, we can go ahead and move along into like, what are ways to establish credit? I think that was one way, one thing that someone mentioned, like this ways to build credit. Oh my God, we're hitting on all the things. So really start off with the most basic of having an income, right? You want to have an income to be able to pay these pieces back, to be financially responsible and build your credit. So you need to be able to like manage your money when you have that income, really assess like how am I doing that now? What are things that I can change? What are all my expenses? Do I track all my budgeting? So really being mindful about those. So as folks are getting like refund checks, working on campus, working off campus, how are you managing that money? Is a good way to start thinking about that now if you haven't had an experience with a credit card. And also like a personal savings account is like a great way to think about like, how am I managing my money? How do I use a savings account? Do I have a savings account? Open a checking/savings account and save and manage it regularly. Opening up an account will be important. And you're sponsoring with starting off with the debit card is fine, right? You're spending the money that you have, right? You're saying like, this is the money that I have, this is all I can spend. If you want to start off with that and just give yourself some practice on how you manage your money there, and then moving on to a credit card when you're feeling ready. Of course, with all the pieces that we talked about on doing your research of which bank, the benefits, what can you really manage with when you're starting off. When you take out a loan, right, that's a way to build credit. Not everyone has to take out a loan right now. And if that hasn't happened for you, that might happen in the future. If you're thinking about a car, a mortgage, those pieces will play a role with establishing credit. And then just adding yourself to a trusted line of credit. Sorry, my mouse is frozen and I can't move my notes. I don't have any notes for that last point. Adding yourself to a line of credit, which is to someone else's line of credit.
Yeah.
I don't have any notes for that.
I a little conflicted here because my personal practices have been the opposite of
Yes,
that.
it could be like there's a lot of things that could be helpful and it could be really risky.
It's real, yeah.
So I would say that one is there as a way, but I'm not saying that that's like the best practice.
Yeah.
And I'm not gonna.
And
So you
sometimes
shouldn't.
that's the only option that
Mhm.
people have to, right? So I'll give like a brief narrative. I share that my mother taught me like early on, credit is like super important. She told me when I was young that she will never co-sign for me on anything, like my own mother. Which at first I was like, that's so rude. Like you wouldn't do that. Like I'm your only child. How can you not? And what I now understand is like the importance for me to build my own credit and not have to need a co-signer. So let's say like with a car, right? Like that's a really big amount of money. Like you're talking thousands of dollars minimum, right? Like you're not, I mean, I don't know if you can get like a couple $100 car. But if you don't have a huge credit history, you will most likely need a co-signer, right? And my mother told me first on, she's like, I won't sign for you. You have to build your credit first, and like to not need me or anybody else. That's what happened with me. And so, but for some people, they absolutely need a cosigner, right? When you get a cosigner, that person's credit score kind of gets toppled on with yours. And you get to, as long as you're still making your payments, you're still being responsible, your credit then goes up. So that's another way to build it, because you're being by having a cosigner, you're basically signing a contract that says, if I can't make a payment, then this company or whoever is going to go after this other person because we can rely on them to make the payments, which is real risky, right? Either for you to ask for a cosigner or to even ever be a cosigner, because if you're a cosigner and someone doesn't make their payments, they're going to come after you. So, and as long as it's somebody that you trust and that you feel comfortable with being a cosigner, right? Like that is also a good option that does improve your score because of that other person's credit. So it kind of depends. Personal opinion, not professional opinion, not best practice. And also recognizing that that may be the only option for some people, and that's also okay. That's a little funky.
Yes, thank you for sharing. We talked a little bit about this already. I think it's just reiterating some pieces. Only use what you're comfortable, like paying back what you can pay back, really, right? Repay your full balance, bills on time, like we've mentioned before. Keep your credit card balances low. Just because the limit might be 7,000 doesn't mean you should be spending that and that they want you to spend that, right? Like Stephanie said, which I didn't know, you can ask for banks to lower that back down if you're like, oh, I don't want this limit. I don't need that. And I don't want to get tempted. Keep accurate records of changes, statements, and payments. What do folks use to do these things? Any ideas? I have some thoughts. What do people use to like keep track of these things? Does anybody use Credit Karma?
Use Mint.
Mint. I use Mint too.
I love Mint.
Mint. Okay, these are apps that will ask for your personal information, but they're secure. But it's because they're providing you information about your credit scores, about payments that you have coming up that you need to keep an eye on. Budgeting. It'll keep an eye on like, hey, this month you spend 60%, I don't know, on like entertainment. Well,
Yeah.
I'm spending what?
Yeah.
But I'm not paying for like all these other basic needs that I
Yeah.
have, right? So
Give me
it's really good.
notifications.
So check out Mint. It's reliable. Credit Karma is good. They send you updates if your credit score has changed, so that you can see like why is it being like what's impacting my credit score, and you get alerts about those things.
Mint does that too. It gives you an update whenever your credit score changes. And yeah, like you said, like, oh, like you spent $11, like you went over $11 on your coffee
Yeah.
budget or whatever.
Yeah,
Um,
which is cool because you can
yeah.
make your own like,
You set your
Plan.
own budget.
and it also will tell you like you spent like $100 more this month than last month
Mhm.
on this, and so you can see
It's great.
like visuals of like, oh my God, I'm spending more and more each month. Is it the holidays? I'm just kidding. Stuff like that. Sorry, that was really aggressive. Also, don't close old credit cards. I don't know if folks have experience with this. If you're not using something, typically you can like just have it. Sometimes if you're not using it though, you need to keep an eye on it, because if you're not using it for months, sometimes that company will close it down because it'll want you to have at least like something every month that you can spend on, which is kind of crappy. Typically that's like for stores. I've had a card close on me at Old Navy because Old Navy, oh, don't get an Old Navy credit card. I was paying everything back. I just stopped using it because I stopped going because everything was, and then they closed it, right? And I didn't know. And that's something that I didn't realize and notice on like before I got that credit card. I literally got it because they were going to give me 70% off on one purchase if I got a credit card. Don't get bamboozled.
So,
Any
And-
experiences or shares about any?
So,
clothing lines?
yeah, I've had like cards that I knew I wasn't gonna use, but I didn't actively close them myself. I just kind of let them close on their own after like over a year
If
of
you
not
don't-
using them.
Yeah. that happens.
And then I've had cards that I'm like, okay, I have like X amount of open lines, credit lines. I don't want to have too many. I want to have like a smaller number, but very intentional about the lines that I have open. So I've intentionally closed some that I'm like, I don't need these store ones. I don't need 10 store credit cards. I want to have like 2, I have like 3 big credit cards, and even that feels like much. I'm like, I need to bring down to 2. But even in those lines, I have really high credit limits. So just being intentional about like, what do you have open? What do those lines do, and how do they affect you? Do they benefit you in any way to have them open? Because some do and some don't. So just assess your situation. Some they'll like let them close out on their own. Others you can intentionally close.
And the last piece is just making sure if there are any errors or things that come up, just really being prompt about that and doing something about it, right? Like
Mhm.
we keeping an eye on all those pieces. Just checking along. Just want to talk about the 3 major credit bureaus, which is I can never say Equifax,
Equifax.
Experian, and TransUnion. So usually when you log into like Credit Karma, you'll have most of it. Typically, if you have credit from like all of these, it'll show you what categorized under which one, and then all those pieces play a role into that ultimate credit score. So keep an eye on that. I don't know too much about like what they all entail, but I would say just keep those in mind. Yeah, because they all have different information regarding different credits pieces that you have. Just last thing I want to talk about, which we kind of have thrown and sprinkled throughout the presentation, is some resources. So Credit Karma, Mint, other apps, really do your research on some of these. And they're reliable, right? Make sure that they're reliable. They'll ask for your personal information because they are pulling those pieces. And if you're using those, really use them to your advantage. Like Stephanie said, you can use Mint to really build a budget. It'll give you alerts, what's your limit on like gas this month or entertainment, and it'll keep an eye on that for you and tell you if you're staying in that limit. I also included just Union Bank. I'm not saying that they're better than just like big branches. I'm just stating that on there because Campus Credit Union, right, is on campus. We work with them a lot for a lot of our workshops. They do a lot of workshops on campus for students. They just want you to really know the difference between credit unions and banks, which I know we didn't get to talk about today. And there's a First National Bank on campus as well, right? So just really doing your research on like, what are those differences? What perks am I getting on one versus the other? Union banks are usually smaller and more like community oriented and offer like different rates that are usually like better. So keep those in mind. For loans, I know we talked about student loans a lot. Federal student aid, specifically for federal loans, is a great page, a great resource for folks to keep an eye on all of their federal loan information, all the interest rates, repayment plans, tips about paying student loans back after folks graduate. So make sure that you always refer back to federal student aid, and you have a login for that, and that's your password login. You have access to that information forever. Your loan stuff is always on there, especially if you continue on into graduate school, you'll have information in there. Oh, I included Mint. Yes, do your research. Any other resources that come to mind for folks in the room and Zoom, Stephanie?
No, that covers all of them that I
Awesome.
know of, yeah.
Yeah. Well, this wraps up our presentation. Do folks have any like questions or things that they want to add to any of the information that we shared? Well, I'm going to go ahead and just give folks a form, and if Stephanie wants to go ahead and place the link of the document. This is just kind of a take it with you to kind of start getting an idea of like, okay, does this apply to me right now? It's just a financial planning worksheet around like credit. Of course, this is just for your own benefit. folks are wanting to look at more like budgeting stuff, there are a lot of things online, so please feel free to use those things. Just a reminder for folks to complete the CLF evaluation form. There's one for classic and one for STEM, so make sure you're doing the appropriate one. You can find those on our website under STEM Thrive or Classic Thrive. So please make sure to do that at your earliest convenience. That's how we will track engaging with the requirements. So thank you all for being here. Do folks have any questions? We'll just hang out here. No, awesome. Well, thank you all for being here. I'll hang out here if folks have any questions. Thank you all for being here.
Yeah, thank you.
Thanks, guys.
Bye.
Let me put the link for the thing.
I know what this is from.
Is it Arrested Development? Yeah, I love that show.
Bias crushed me. Do you remember
He's
that? Do
crazy.
you remember the episode where he would only shower if he was wearing jean shorts?
I kind of remember that one. Oh yeah, he would. Oh yeah, he wouldn't like
He
go
wouldn't-
naked.
yeah,
he would have to.
Oh, when he joined the Blue Man Group.
Yeah. This show was funny.
It was funny. It doesn't, the last few seasons